Gather the family around the television for financial advice. It's something we should all be tuned into and have great knowledge of, and we can't think of a better expert than Jeff Fehrman of the Fehrman Investment Group to join us on our set once again. Jeff, thanks for being here.
Great for being back. I hope my report's the one that's exciting and uplifting.
It is, yeah. We're gonna lift you up financially and then lift you up emotionally at the end. But I wanted to talk about a lot of things with you. First of all, we're coming off of tax time. Thank goodness. That season is over. The first quarter is behind us. Take a look at some of the positives, if you will, if you see any, for our economy.
Yeah, sure. There are some positives, and there's always positives, always negatives, and hopefully there are more positives than negatives, which we think is the case today. Some of the positives is going to the gas pump. All of us, once a week or however often are there. Gas and oil still continue to be extremely cheap, which we think is obviously a positive for you and I as consumers and our audience, but also it's a positive because it puts money in consumers' pockets. So that's a good thing. The other thing that's been positive is two components. One is job growth, which we've continued to see more jobs. That's a positive. But something we think is an incremental positive is wage growth. We saw a lot of jobs coming on, but till more recently, we haven't seen a lot of wage growth, which helps the economy as well. You got to kind of have both those pieces. And then last is consumer spending. The consumer is about 70% of gross domestic product or the economy as a whole. The oil price, again, helps the consumer, as well as consumer confidence still seems to be pretty robust in helping the economy in a whole.
Couple of quick questions on those points. First of all, gas prices, do you see them staying low through the summer driving season? Because you're right, they're really nice right now.
Yeah, it is great for travel season. I would suspect they could edge up a little bit, but I would think, towards the end of the year, we're going to see higher oil prices, and at some point, obviously, that translates into gasoline. But we don't think that's going to be a drastic move back to $4 or $5 a gallon or something like that.
I've had Mayor Hardy Davis on the program. I had former Mayor Dee Copenhaver on not too long ago. Both of them talked about Unisys coming to town and the great high-tech, high-paying jobs that Unisys is bringing. Would you put that local company in the category that you mentioned of better jobs, better wages?
Yeah, absolutely. I mean, and that's what we're seeing is as a whole in the country, not just locally. But you're right. It's a great local example that we all need jobs, but one of the problems we had is underemployment. Over the last 4 or 5 years where people had a job, but they had a job making a whole lot less. Still better than not having a job, but obviously that impacts the economy negatively because they don't have the spending power they had before.
Any issues that you see this early in the year facing our economy? Anything on the horizon that is cause for a little concern?
Yeah, sure. There's always things you want to kind of keep your pulse on. One of the downsides is that the global economy continues to be softer than ours. Again, there's pockets that are better, but generally we are one of the faster growing economies in the world. Europe's a struggle still. So that's a component that hurts us a little bit as a country. Also, I would say, a potential Federal Reserve misstep. We believe rates probably don't change this year, so I don't think that's on the horizon, but that could have a serious impact. And then something else to keep your eye on, our earnings reports for stocks this year. Our company's actually having bad earnings reports. That has softened a little bit, but still is positive. So we're not deeply concerned about, but those are 3 areas I kind of keep my eyes on.
Back to kind of the global picture, because we do live in a global world from an economic standpoint. Everything that happens everywhere else ultimately does impact us. What's going on with those economies overseas?
Yeah, so emerging markets, so places like Latin America and some other areas have really struggled. They've been a net negative for the world, and if you own stocks in those countries, you probably had some pretty abysmal returns. So the emerging areas of like Latin America, China's still continuing to slow. They still have positive economic growth, but we're not sure, they're not quite as transparent as the U.S. We're not sure exactly what that number is. So that's something to, again, keep your eye on. And then Europe, is fairly slow. They're doing so much to stimulate their economy, which we did different methods, but we did 4 or 5 years ago. It just hasn't got as much traction as it did for us.
Let's go back to those gas prices and what it might mean to the overall economy. I get my gas card bill each month. This month it was shockingly low, and my first thought was, what am I going to do with that extra money that had been budgeted for gas? Do a lot of people look at it that way, and a lot of people look at, hey, how can I help other parts of the economy now that I have extra cash?
Yeah, that's the double-edged sword for the economy. For the consumer, as you say, that extra money in your pocket's good. That extra money in our pocket is good for the stock market and companies potentially when we're spending it. The flip side is also true, which is part of the lag in 2015. Energy is a decent component of the S&P and the markets as a whole. You know, you got big oil companies here in the States. Their earnings were significantly impacted, as you can imagine. We need to be $50, $60 a barrel for those companies to have fairly robust earnings. So it, in some component, is hurting stock market returns, but it is helping indirectly as well.
We always get you to touch on the real estate market when you're here. What are your thoughts on real estate? I see a lot of for sale signs. I wish I saw more sold signs out there, but there are a lot of for sales right now.
There is, you know, real estate nationally has bounced back. It was very soft for a while. The demand has crept up. Supply is behind, relatively speaking, I think, because we had so much oversupply a while back. I think that's fairly true. I do think, actually, generally, our real estate market's better than the country as a whole because we've got the Cyber Command and things coming in, other companies that are coming here to Georgia. So those are good positives for us. I do think this cycle you'd usually see more robust growth in housing, and we haven't because the credit market is still really tight. It's very difficult to get a mortgage, and that's impacted the momentum, I guess, of the housing market, Brad.
The election that we're all following for the race for the White House has been interesting, to say the least, so far. What impact is that having, or might it have in the coming months on our stock market?
Yeah, I think, you know, the market as a whole doesn't like uncertainty. Mm-hmm. So in particular, election year like this year where we don't have any incumbent, well, either way, we're going to have a different president than we had. So no matter what side of the political equation you're on, that's adding uncertainty to the market. So we believe that's going to add some volatility, not necessarily all negative, but a lot of ups and downs, bigger swings in the market through the election season. Also, because you have some wild cards depending on who's running, you could have businesses maybe decide, hey, we're going to take a wait and see as far as, you know, maybe adding that next building or something until after the election cycle, which could have a little short-term impact on the economy as well.
So overall for the stock market for the balance of 16, do you see that volatility that you mentioned, you know, carrying us through the end of the year? Will we have any periods where it's stable? What do you think stock market-wise?
Yeah, I think just generally, you know, we've had a really nice bounce back the last 3-4 weeks, which has been, you know, after a really abysmal first quarter mostly. So that's been a good positive. We believe you are going to continue to see those ups and downs. Again, not necessarily negatively. We think you're going to have positive returns this year, but you got to be prepared for some gut checks of, okay, we're getting whipsawed quite a bit. So that's, you know, not all bad, but it makes it a little more painful. We think there's a low probability for recession. We're continuing to grow, albeit a little bit slower than we'd like to see. And, you know, from a returns perspective, I would take a more cautious approach this year. Doesn't mean I'd go to cash or something, but I wouldn't be going way out there risk-wise. I'd be a little more cautious and expect kind of mid-single-digit sort of returns.
Before I let you go, it's worth mentioning, you know, this is a high time in Augusta in the wake of the Masters. Everyone is feeling good. People who worked that week might have some extra cash in their pockets. People who rented their homes might as well. So while everyone is sort of feeling flush, what's some advice you can give with that extra income? Maybe kind of be careful with it, right?
Yeah, you know, a couple things you could think about. Certainly if you had Masters money, it's after tax season. If you got some money back on your taxes, if you had some credit card debt or, you know, high rate debt, that'd probably be my first stop. You know, pay that down because your rates are so high. If you don't have things like that, you know, maybe think about that incremental bump in your retirement account or Roth IRA or whatever you qualify for would be great places to be productive with that money.
I know there are a lot of commercials out there, people trying to get in your pocket right now, but listen to what Jeff said. Maybe the wiser course is one to follow right now. Jeff, thank you to you and Will and everybody at the Fehrman Investment Group for your help.
Absolutely. Thanks for having me back.
Absolutely. We'll have you back very soon. Jeff, always on hand to give us our financial advice.